Welcome to our 2026 town hall. So this is pretty cool. New year, new fun, new goals. Who's got some big goals this year? I don't know. I want to kind of Charmaine. What? Give me a goal. Something not too personal, but
Gonna try to finish paving in the rest of my backyard. Not the whole thing.
oh,
We've
cool,
already got one side and we did it ourselves. It was bad.
nice. Yeah. Anybody else got a goal this year? What do you got, Bree? You're gonna go on what? The show? That's crazy. All right, who else has a goal for me? What do you got? Okay, cool. Maybe you can show me kind of what's up so I can page a little slower. I don't know. So my goal is to close 1,000 loans. So I'm hoping we can get there, and I'm everyone has a big pivotal role to play in that goal. So, but we're here to kind of talk about last year, what we did last year, and kind of what we're doing moving forward. So, do you want to maybe go to the next slide or give me a clicker or something? There you go. So essentially, I'm not going to wait till the end to answer questions. So you can just throw them in the chat, raise your hand, whatever. Really want this to be back and forth. So as questions come up, just throw them in, and we'll discuss them. So, all right, let's keep going. Got a little first responders outside. Ooh. All right, that's what it's like living on a corner. So we're on a busy corner here. All right, let me see next slide. Okay, so the agenda. We're going to go over kind of what we did in the fourth quarter. We're going to re-look at our core values, our purpose, why our company exists, the value we give the market. We are going to go over news and updates. So what's new here at Central Lending? We're going to go over goals and some extras, and then a structured Q&A at the end. But as I said, I want to take questions throughout if there are any. So please just monitor the chat and let me know if anything comes in. All right. Next slide. All right. Do you have a clicker? Maybe I could do it. There we go. All right. Let's try this. No, it's not working. All right. Well, let's just go to the next slide with the mouse. Okay. So fourth quarter goals, we wanted to do in the fourth quarter 40 million of loan volume, which we believed it would require 200 closing units. Divide that across a sales team of 12. That in 12 weeks, that's about 15 closings a week. 6 processors doing with 12 weeks, 3 closings a week. So that's kind of the numbers we thought we would hit in the fourth quarter, or that's kind of what our goals were. And you can see how we break it down by seat because we don't want to be understaffed, we don't want to be overstaffed. So there's really kind of a balance there that we try to. We really need your input to make sure we get that balance right. We felt like we needed to qualify 350 units to close 200. And we felt like we needed to quote 1,600 units to qualify 350. There's been some confusion about what's a lead, what's a quote. I want to explain it very clearly so that no one is confused about this. A lead is a name, a first and last name, an email, and a phone number. That's it. First and last name, email, phone number. Even if you have some of that data, not all of it, it's a lead. So that's a contact record in the CRM. So that's in Go High Level. A quote means someone requested a loan on an actual property address. So they might not have completed the application, but they went in and said, well, I want terms on 123 Main Street for my fix and flip. That's a totally different type of scenario. We call that an opportunity, and that's a much higher value opportunity than just someone's first and last name, their email, and their phone number. So just want to make that distinction clear. We expected to get the servicing portfolio up to $100 million at the end of last year. We thought AUM would end at 46 million, and then investor capital managed, we anticipated 28 million is where we would end up. And we came to you 3 months ago with these goals in mind, and I believe we brought the results with us. We can go to the next slide. So closed loans, we were pretty close to our goal. This was a big goal. So just because we didn't hit it doesn't mean it was like an unsuccessful quarter. Team worked very hard. It was a stretch goal. We pushed ourselves and we had some great months. So, pretty proud of the team for how close we got here. We were 90% of the way there, but a little bit short of our fourth quarter goal. We ended with 35.5 closed loan volume for fourth quarter. All right. For closed units, we were significantly short here. So we had some bigger units in the fourth quarter. So we didn't quite move the amount of units through that we thought we would. Let's go to the next slide. And then qualified units, we were closer here on this goal. So we're noticing that our pull-through rate has been suffering as a company. We are qualifying loans. We're qualifying too many loans that don't end up closing. And we don't, on the one hand, we don't want to lower our credit standards and just kind of approve everyone that applies. But on the other hand, we want to ask some more questions up front to figure out, do they really have the cash they say they have? Do they really have the credit they say they have? Is the background clean? Is the experience the type of experience we would count? So we really want to work on that pull-through rate because we're spending a lot of money as a company we're spending a lot of resources on deals that don't close. And that's obviously an issue for us. And then for our customers, we don't want to let them down either. So we really pride ourselves on issuing you a term sheet that will close as long as what you've submitted on your application turns out to be true. We want to be best in the market at doing that. Okay, next slide. Quotes were good. We quoted a bunch of deals. So we just want to quote better deals. So this is a pretty good metric here. All right, let's move on. Active servicing portfolio. So we projected we would end the year at 100 million in the servicing portfolio. We've actually surpassed that goal. So congratulations, team. That's a lot of capital to be responsible for. This includes loans that are sold with servicing rights retained, meaning we're servicing the loan on behalf of someone that we may have sold the loan to. It also includes loans on our balance sheet. So about half of these loans are on our balance sheet. About half of them are sold to third-party investors that we help them with collections and construction draws, approving payoffs, and so on and so forth. Negotiating extensions, workouts, loss mitigation, all that stuff. All right. Assets under management, we ended the year with just under 40 million in assets under management. Goal was 46. All right. And investor capital managed, we ended the year with 23 million in investor capital managed. Goal was 28. Okay, this is the history of all of our deals. So let me explain what a completed loan is. So this pie graph does not count loans that are servicing released. So it does not count like a brokered bridge loan. I think we've had a handful of those, not many. And it does not count a brokered DSCR loan. This counts bridge loans that we funded where they've reached a conclusion. And we measure 3 results. We measure getting our principal back, which is in green, which is a good result. We measure getting less than our principal back, which is in yellow. That's a short sale. And we measure getting a property back, and that's in red. And that's also a bad result. So we want as many green as possible. Yellow means there was a loss of some principal. Red can be a loss of principal, it usually is, but also those can be profitable if you lend at the right level and it's a good deal. So, so we've had $200 million worth of loan units resolve and we've had about under 2.5% with a negative result. So REOs are under 2%, short sales are under 0.5%. In the current portfolio, you can see there's about 90% of our loans are current, and about 10% are in some form of some other state. And the states that we look at are 0 to 30 days late, 0 to 30 days matured, 30 to 60 days late, 30 to 60 days matured, and then 60 plus late and 60 plus matured. There is a lot more concern for something that's 60 plus matured and 60 plus late as compared to a loan that is 0 to 30 late or 0 to 30 matured. So we have a higher risk of getting an REO or a short sale if it's been, basically the later it gets, the more distress it gets, the higher the percentages that it's going to keep going distress. So a 0 to 30 day late is very likely to get current. A 30 to 60 day late is somewhat likely to get current, somewhat likely to keep on staying non-performing. A 60 plus late, it's really hard for that to get caught up, back and current. So really important to kind of try to catch these early and try to resolve any potential losses. So for fourth quarter of last year, our top producer was Jamie Creamer. So she closed 33 units for $5 million. Let's give Jamie a hand. So Jamie's quite a stud. She's been with us for a couple of years, and she finished last year strong. So we're really proud of her. All right. Last year's big kahuna was a new account executive at Central Lending, Mr. Jonathan Davis. He closed is the loan amount here? Yeah, it's $2.3 million loan down in Holmes Beach, Florida. It was a ground-up construction loan. So let's give Mr. Jonathan Davis a hand. So I'm excited to see what the 2026 big kahuna will be. So I'm kind of wondering, we kind of need an over-under, maybe an office poll. Maybe 5 million, 4 million. Maybe we'll do maybe we'll do an office poll for it, make it fun. All right, fourth quarter office champion. Who is that on there? I'll come back to that one. Purpose, funding that's flexible in structure, reliable in execution, and fast when it matters. And the leadership team spent a while on this. It's hard to describe to the market what we do because we believe we really bring something new to the market. If you just Google hard money loan, you've got 3 pages on Google of options, but they're not all equal. Just because it's a busy market with a lot of capital out there, it doesn't mean everything's equal. So we believe that we can be flexible when it makes sense and when we don't put our investors at risk. We believe we are the most reliable lender in the market, and newer investors may not appreciate that, but the seasoned investors who miss a closing date, have a deal blow up, who have terms kind of change on them at the last second, that's valuable to the right clients that we want to attract. And of course, fast when it matters. So we don't want every loan to be a fire drill, but if you need the 3-day closing, we can make it happen. So we think all 3 of these are important. These are our core values. Be better than yesterday. The point of core values is basically, what is the type of person that's going to be successful here? And when I think of the type of person that's going to be successful here, they embody these 6 traits. They're constantly improving themselves. Be better than yesterday. They take initiative, which means act now. Don't wait for something else to line up, someone else to, fix a problem or do whatever. Success through innovation. We're a small company and we're growing quickly, and we're changing systems and changing processes, and that can be frustrating. And we're trying to do a better job of rolling out change in a thoughtful, meaningful way. But at the same time, we kind of need you guys also to roll with changes that may be uncomfortable at times. Relationships is big here. There's AI all over the place. There's algorithm-based lenders out there in the market. We think that fostering relationships can still be a difference maker, even in today's market. Ethics over everything goes without saying. We're lending out capital from limited partners, and accountability. So if there's an issue, not necessarily pointing the finger at someone else, even if you think outside things are 90% of the blame, what is your 10%? What is your 10% that you can work on to make the process better? Okay, so some news and updates around here. I know I'm going kind of quick. We don't have questions, do we? No? Okay. So obviously we had the holiday party here. That's been a hit. We had my buddy Nick do a magic show, so that was pretty funny. I think he got all of us with his tricks. I don't think anyone knew what he was up to, so that was cool. All right, what else do we have? We've been building out our software. This has been huge. So after buying basically every loan origination software in the market over the last several years, we decided to just, kind of being unhappy with all the options in the market, we just decided to go in and build our own. And so that's been quite a learning process. We're about 4 months in, but I'm proud to say we have a software that's pretty powerful that is only going to get better. It's white label friendly for third-party originators. So you can have third-party originators invite their guarantors, and soon it'll have that third-party originator's brand and their colors front and center. We're adding more features here. So we're adding in the ability to download a term sheet from the software and get a pre-approval letter customized to the deal. I believe that update is going live tomorrow. We're going to add a servicing module here, probably second quarter, third quarter. So for draws and all that and payoffs, and get an extension and get a refinance, like 4 buttons. We're adding integration with Plaid, so we could do asset verification. And we probably see, kind of crazy, but we probably see 1 fake bank statement per month. And that's the reality of hard money lending. We probably see 1 fake bank statement a month. Integrating with Plaid will stop that, obviously, because they'll have to log in, connect their accounts, and it'll just help us a lot. Also, live ID verification. We may integrate with Richer Values through an API so we can pull values quicker. So there's a lot of we're gonna have document upload feature also coming out in the next quarter. So expect processing to get a lot smoother with the assistance of some of the technology that we're working on. We are reconnecting with what we call very important brokers. So we looked at who are the 10 highest volume brokers that we worked with over the last year. And we're connecting with them. We are offering our software to them as a white label solution for them to run their entire business out of it. So we want you to use our loan origination software. It's free right now, by the way. We're giving it to you. And we just want to see the deals, even the deals that you're not sending to us. And we think selfishly, if we build the best software, give it to you for free, you'll use it even for deals you're not sending us. And then we can kind of see where we need to get a little bit more competitive on pricing. Our high volume brokers are also getting really aggressive pricing. I don't think any other big lenders are beating us on price right now. We are doing quarterly meetings. So the leadership team meets every quarter, as does each department. So this is a new initiative on the EOS system. Everyone has to schedule their new quarterly. We do team meetings every week. They're an hour, they're quick. You're putting out fires essentially for that week. We really want to set aside a little more time to go deeper and kind of restructure departments or rethink key processes. And dig a little bit deeper on big improvements. So that's the thought behind the quarterly meetings, and that's something that we just rolled out last year, and that's getting better and better. Last year we also started giving $50 per closing to a nonprofit. The first nonprofit we chose was Turning Point, and so I'm proud to say that we've donated. I don't know the total on here, maybe $10,000 or so, 10, 11,000. So, and that's basically we're pulling $50 aside per closing, and we're setting that aside for a nonprofit. First one was Turning Point. We're going to change that throughout the year, so we're kind of looking for suggestions for this year. So for January, it'll probably be, yeah, everyone has their own cause, so please get with Karen, Alyssa on nonprofits that are important to you, and we're going to divert these funds elsewhere. Probably each quarter we'll switch it up. Another key initiative was moving to Agora. So this is a very important side of the business, but it's a side of the business that I feel like maybe we don't focus on it so much in the Lakeland branch, but it's very important. And these are our passive investors that essentially fuel all of the deals that we are funding. And so their tech experience was not up to the standards that were acceptable to our capital raising team. So the capital raising team made the decision to look for alternatives. And after they demoed 3 or 4 different options in the market, compared pricing, ultimately we settled on Agora. Agora is a platform where you can log in, check your balances, your audited financials, get your K1, look at your statements, your redemptions, all of that investor activity that we have to process to our limited partners. And so a very important side of the business. That was a big migration. A lot of data had to move from old systems to new systems. So happy to say that that migration is now complete, and moving forward, it should be pretty smooth sailing. And the software looks great. I've logged in on my own account, so happy with the move there. On that note, a lot of people have asked, what do you guys offer passive investors? And if you guys know of any accredited investors who may want to get involved here, we offer ownership in our funds, which is a little more complicated because that means you're participating in profits, which can vary. In a good quarter, it could be up, in a bad quarter, it could be down. But other than just direct ownership, we also offer our fixed rate notes. So you can see this grid that we update each quarter. Right now, we're offering a 7% coupon. This is annualized, so it's not 7% in 4 months. It's 7% annualized, paid over a 4-month term. So 7% return from 0 to 250, 7.5 on investments of 250 and above. And that's because a 4-month investment is so liquid. It's really kind of a processing. It's really inconvenient for us, and it's a very liquid instrument for you. That's why the return was a little bit less. But as the term extends out and as there's more opportunity cost, you'll see the rate goes up. So a 12-month investment is 10% on small balance and 10.5% on large balance. And a 24-month investment, we're paying 10.5 up to 250, and 11% 250 and above. Heather Dreves, who's in charge of the capital raising team, has a webinar coming up pretty soon, so January 8th. So if you have any questions about the capital raising side of the business, or how to invest, or these kinds of things, please reach out to her and scan the QR code there to register for the webinar. I'm also happy to say that we are bringing back the Investor Summit. So it's going to be here in Lakeland, Florida. It's going to be at our headquarters. It's 2 days, the 15th and the 16th. We're still fine-tuning the schedule, but we learned a lot from last year. So it's going to be shorter time slots for each speaker. Slightly shorter days, more time to visit, meet the team, walk around the office. And we are also inviting more borrowers this year. So we're inviting our passive investors as well as our borrowers, and also our team, of course. So everyone's going to meet everyone. It's going to be a really cool, open open environment and really excited about the speaker list. So we'll release that as soon as we have it. We hope to see you there. Also, the 14th is a unofficial travel day, so there will be a cocktail hour on the 14th, and we'll have more options available then as well. And of course, please scan to get involved in the Investor Summit. It's a free ticket, so the space is limited, so we do have to approve everyone, but we do want to encourage attendance. We want to kind of get a feel for numbers early. We're not an event company, so this is new to us. We kind of stumble through it, but it's hard to kind of predict how many lunches do you need, how many seats do you need, how many tables, chairs, how many lanyards do you need. All this stuff has to get figured out. So the earlier you can let us know, we would really appreciate it. But we hope to have a full event, and it's going to be better than last year, and last year's was good. So excited to have that again. We got a bunch of new team members. So Taylor, Daniel, Alyssa, Isaac, Simon, Jeremy, Dawson, and Mark. And I apologize for the three faceless bubbles there. These are real people. They're not AI robots. We just didn't have enough time to grab their headshots. But we welcome everyone to our team, and we're happy to have you guys. On that note, if you're interested in learning more about a career here at Central Lending, scan this QR code, and we've got the openings there, the pay, the apply now, all that stuff. Okay, so that's a lot of detail. Now we're going to talk about what we actually sell. So we sell money. So these are our loan products going into 2026. So our first loan product going into 2026 is the Investor Rehab. So there's been talk about with the software here and with our backend software, and some people are on Google Sheets. We've kind of had different formulas throughout the system, throughout the ecosystem. What we're going to do is we're just creating this one pager to serve as the source of truth. So instead of having to read through a complex formula, you can just look at this. So this is what we offer. So our first product is the Investor Rehab product. The way to think about an Investor Rehab is you are buying a piece of real estate that's already been improved with a structure, but it needs further improvements to get to its full value. So it's not a vacant lot, it's not a tear down, it has a structure there, but the structure might be distressed, maybe has a kitchen from 1985, I don't know. It needs work to get to its full value. So that's what an Investor Rehab is. Currently, we offer these options. So we have our top leverage is 92.5% loan to cost. Middle option is 90% loan to cost. And third option is 85% loan to cost. There's credit-based adjustments in the table on the left. Essentially, if your credit's lower, it's a smaller loan and it costs more. We also have experience adjustments. Same thing. If your experience is lower, it might be a slightly limited loan amount and it costs more. And then there's several deal-based adjustments. So things like apartments or rural properties or loan amounts or cash out bridge. So these sort of deal adjustments will affect your final offer. But this is our main, I would say this is our main product. We sell this loan the most. Next up is our ground up construction. So this is a pretty active loan product here as well. Top leverage for ground up construction is 85% loan to cost. We also offer 80% loan to cost and 75% loan to cost, and you get a pricing break for each 5%. For cost, we include everything. So we include your land costs, your soft costs, and all of your construction. We don't include interest payments, or if you're the GC, like if you're paying yourself a contractor's fee, like we don't include that type of cost. But any type of legitimate capital improvements, all of that stuff goes into your cost. So let's just say you have a deal, the land's 100,000, the build's 400, it's a 500K deal. We're going to fund 85% of that. Same thing on the left. There's credit adjustments. There's experience adjustments in the bottom left, where we're going to look at your total experience, including your flips and your rentals. But we also look at your build experience in a ground-up construction. So if you've got 10 rental properties but only one build, that's a different type of loan than someone who's got 3 rental properties and 3 new builds. So our system will automatically do this for you online. You just submit your deal and it'll fix it for you. But all of your experience comes into play, and it affects your loan terms. And we also have the same deal-based adjustments here as well. Bridge loans are properties where the real estate is improved. So the real estate's improved with a house typically, but no further improvements are planned during the term of the loan. So there's no construction on these. And because of that, these are at a reduced leverage. Bridge loans, a lot of times, are used as just temporary financing, maybe while working on credit to get to a refinance scenario, or sometimes you're bridging a gap into a future construction loan. So there's more of a niche product, but it's a more conservative loan because there's no construction in the loan. All right, so goals for 2026. So these are our 1-year goals. These are big numbers for us. So we are trying to double. So last year we cracked the 9-figure mark of loan volume. We want to hit 250 this year, so $250 million in loan volume, and we want all of you to be a part of it. We anticipate that we're going to have to close 1,000 loan units to get there. We also anticipate we will have to qualify about 1,800 units to close the 1,000. And we anticipate we're going to have to quote or create about 9,000 loan scenarios, because not every loan scenario is something that we qualify to process in the first place. We anticipate that at the end of the year, we will be servicing about $200 million worth of loans. We anticipate our assets under management will be $85 million. And we anticipate we will be managing about $42 million of private investor capital. We also anticipate that we're going to do about 2,000 construction draws. So Ross is going to be very busy. 250 extensions, and we anticipate about 600 sold loans. So just kind of the reason I put these numbers out here up front is I just want to get everyone into that headspace. What does my day-to-day look like? What does that look like? What processes do we need to refine? What resources does my department have to give to me to hit my numbers, so that it doesn't come out of left field where we're just totally overloaded. So those are the numbers. I do think we'll have a ramp up to get there. It's not like we're just flipping a switch here, but a year goes by quick. We also have some non-number based goals. So we anticipate that we will get our permit pulled for the third floor of our headquarters. So we may be able to start construction on that. I'm trying to pull myself out of loan approvals, and I'd like to accomplish that this year. We want to be a little more diversified with our secondary partners. We are looking to optimize our software as a service. We buy a lot of software here, and we could probably do without some of the softwares that we have. We want to push our sales team to use more technology. We want to close more units more efficiently, and we sort of have the reputation of the sales team has to really quarterback things, has to manage Excel files and documents and this and that. And so we really want the software to lower the amount of pain that goes into getting a unit closed here. We want a larger satellite office in the Pacific Northwest. We are building out our marketing department, which is kind of a new thing for Central Lending. And then the last one, which is very important, is we want to stabilize the REO that we own. So we have a couple of lingering projects that need to get rented, refinanced, or sold. And so getting some of that stuff stabilized is going to really positively impact investor returns. So breaking the 1-year goals down into 90-day goals, we anticipate that we will close 40 million of loan volume this quarter, 180 units, 360 qualified loans, and 1,800 quoted units. We anticipate that by the time I'm speaking with you in April, we will have 120 million in the servicing portfolio, 50 million in assets under management, and 30 million in investor capital managed. 350 draws in 3 months, 45 extensions, and 100 sold loans. So you see how and we actually have a 3-year goals as well. You see how there's 1 year, and then there's 90 days, and then it kind of goes to your week-to-week numbers. We really all want to be dialed in because this feeds into everyone's contributions, and it's just kind of important that we're staffed at the right level, because it's hard to say how many people do we need in each position. So your input's really valued here. So it's usually on me to kind of decide Christmas bonuses and rewards and this and that. And I love writing Christmas cards. I wrote a lot of them this year. So we're changing something this year. We're actually moving a lot of that responsibility onto each department leader. So each department leader is going to be in charge of their own budget, all the salaries, all the third-party spending, and all the bonuses. So your department leader will be responsible for going through annual rewards with you. We're also bringing back book club, so excited about that. And that's if you have a book that you think would benefit the team, you can do a quick share on it, work on your public speaking, which is, of course, doesn't really come natural to anyone, I don't think. But it gets easier over time. And I'll give you $100. You get up here, you kind of improve something, share something that's helpful to the team. All right, and that's it for this New Year kickoff and for first quarter. Is there any questions in there? And then did we fix that one slide? Just curious.
We did.
All right.
The one question we have is if you could move the live video image to the lower right or the upper right of the video.
Can you do what?
If they wanted to move the live video.
Oh, I see. Yeah, because it probably would block less or something. Yeah, makes sense.
Yeah. We did have another question in here too. So I know somebody noticed that there was a hit for Detroit.
Yeah.
In all the slides. Why is that?
Well, I love Dan Campbell and I love the Detroit Lions, but Detroit is a market that we don't love. But that being said, the right leverage, I prefer to do a low leverage deal in Detroit than a high leverage deal in maybe more of a different market. So I think at the right leverage, we can be comfortable there, but it's case by case. All right, guys, it's production, we're doing it live, Bill O'Reilly style. Anyone know what I'm talking about? No? Yeah, he does. Yeah. You don't? Seriously? Google it. All right, are we good here? Let's see what we got.
I need to refresh this.
Uh-oh. Are we good? No? Well, you can just tell me.
Okay, so we did this a little bit differently this quarter. I switched things up last minute, and there were so many equal tiebreakers for who was voted on for the quarterly champion. So we went through who the past quarter, you as a team had given a shout out to our core values, and we kind of looked at those and said who was mentioned the most, and what was their participation to the team. The number one mentioned core value shout out from all of you was Randy. She led the way with, I think, 5 mentions in 1 quarter, all for different core values being expressed throughout the quarter. So we're very proud, and definitely deserves the recognition there. There was 4 individuals as well who were all tied with mentions in 2nd place. Shane was one of them. There was also, he was mentioned for a couple times too, the different core values that were mentioned. We had, Michelle, you were mentioned as well. A couple mentions to you. And
okay, so basically, you guys know what I'm talking about, that board where you can, recognize a colleague. We just looked at who had a bunch of mentions, and Randy led the way, and everyone is contributing, obviously, but Randy seemed to go above and beyond the last quarter and get a lot of recognition. So let's give Randy a hand. Thank you. So we're just going to look at who's has a lot of, it's kind of, the voting thing is like, I want to just be thoughtful here too, that there is a bit of a bias to teams that have a big departments with a big team. Like if you're processing or you're servicing, you got big teams, you can kind of, manipulate a little bit. So I want to really try to catch capital raising and marketing. These are really small departments, but they are equally important. So definitely, we're going to look to highlight those departments as well. But we're very happy with Randy, your contributions over the last quarter, and it's noticed by everybody. So thank you very much. Okay, I think if there's no more questions, I give it one more check, and then we'll call it a day. No? All right. Well, here's to 2026. 1,000 units, 250 million. Let's do it.